Today we look into Bitcoin price, which is what will determine the whole crypto market from here. And then we'll talk about which of Warren Buffett's shareholder letter tips apply to crypto and which ones don't. Because if you don't understand the difference, you will go very wrong in these markets. The BTC picture is really clear actually. After the trend turned up, we got a rejection at the first real resistance, here at 25k. Now we have just bounced at the minor support, which is then actually one support higher than the bounce we did on 13th of February. So that's good, but what are the scenarios from here? Right now the trend is up, and while that is the case, I will assume that one of three things happen from here. Either we just break out through the 25k resistance, or we complete an inverse head and shoulder. You see the potential, right? Left shoulder, head, and the symmetrical right shoulder would be down here, 18,600, and then a breakout. If this level actually holds, this would be a high confidence entry, as would the breakout level be. And scenario 3, as I talked about in this Wyckoff video, we get a head fake below the previous lows, reversal back in the trading range, and then a run up. If that happens, at this point here you can't tell. You can't tell if this is going to happen or if it's actually the end and it's just going to continue down. But if it reverses and then holds, this would be another high confidence entry with a clear invalidation. But this is the situation now. If the situation changes, I will change my mind. We have to play what actually happens. And it could. If we look at DXY, the dollar currency index or dollar strength index, it is a different situation. We're no longer in this neat downward sloping channel. We have broken out of that, and say now that we get something like this and we start breaking out higher levels from here. Okay, then maybe this will continue trending up. That would be rather scary. And if anyone is new here, DXY up usually means speculative assets like Bitcoin down. And the market expectations of what the Fed will do has radically changed. If you recall, just a few months ago, the market expected the Fed to make one more interest hike from this point and then a reduction in December. Let's look at what the market thinks now. The current target rate is 450 to 475. Now the market thinks that in March, Fed will raise the target rate by one step to 475 to 500. Then in May, another step to 500 to 525. Then in June, a third step to 525 to 550. Then in July, the same. September, the same. November, the same. And December was a reduction, right? No. Now the market thinks that the December target rate will also be the same. So I will remain humble to that we don't know what the market will do tomorrow. The good news, we don't need to know. We just need to react to what actually happens. And for now, the trend is up. LARSSON line is gold. The chart looks healthy. From the entry I shared with you from 17,433, we're up 34% right now. So there is no need to feel stressed. But what about Warren Buffett? First, we simply have to admire the website. World's biggest financial services company. Personally, I think it's cool. And the annual performance, 2022 up 4% versus S&P 500 minus 18%. Compounded annual gain 19.8%. Overall gain 1964 to 2022, 3,787,000. Bitcoin is still more. $20,000 divided by 1 cent is 2 million times or 200 million %. But still, that's a lot in the stock market. Lesson number 1 applicable to crypto. Warren Buffett writes, at this point, a report card from me is appropriate. In 58 years of Berkshire management, most of my capital allocation decisions have been no better than so-so. In some cases, also bad. Our satisfactory results have been the product of about a dozen truly good decisions. That would be about one every 5 years, and a sometimes forgotten advantage that favors long-term investors. And then he exemplifies with Coca-Cola and American Express, which they bought for $1.3 billion each in 1995 and 1994. In end of 2022, their Coca-Cola investment was valued at $25 billion and Amex at $22 billion. Each being roughly 5% of Berkshire's net worth. Then he says that assume for a moment that he had made a similarly sized investment mistake in the 1990s, one that flatlined, and simply retained its 1.3 billion value in 2022. That would now have represented an insignificant 0.3% of Berkshire's net worth. The lesson for investors: the weeds wither away insignificant as the flowers bloom. Over time, it takes just a few winners to work wonders. This is key for crypto. Most of these projects will fail, 90% plus for sure. That I can almost guarantee. Maybe 99% plus will fail. Just like for Berkshire Hathaway, almost all of your profits will come from a few good trades. And here's the learning. That is if, and only if, you don't sell those few winners too early. I talked about 6 beginner mistakes in this video at the presentation I did for the Binance conference. If you do that mistake and take profits too early on the few winners that you do come across, you won't be very successful, because the vast bulk of the trades or investments won't do much, because you're not going to be better at finding the winning projects among the ocean of losing projects than Warren Buffett and Charlie Munger are in their markets, because it is difficult. Then he talks about the stock repurchases are good. It's funny how buying your own coin to pump the price is bad in crypto, but perfectly legitimate with stocks. Anyway, the next lesson I want to highlight here is that Berkshire will always hold a boatload of cash. And that point is very applicable to crypto too. We don't know the future of markets, but if you wake up tomorrow and there's a buying opportunity of a lifetime, but you have no available cash, you'll miss it. Similarly, as quite a few of the crypto billionaires have now realized, it's good to have cash if something bad happens, like the uncomfortable cash needs at inconvenient times, including financial panics, because then you don't need to go sell a good investment at the bottom to cover for that. So to recap the first 2 insights. Number 1. A few winners will make all your money, so don't sell too early. Number 2, have cash available. Before we go into the third one, I want to highlight something absolutely fascinating. Some surprising facts about federal taxes. During the decade ending in 2021, the United States Treasury received about 32 trillion in taxes, while it spent 43.9 trillion. Berkshire's contribution via the corporate income tax was 32 billion during the decade, almost exactly 0.1% of all the money that the Treasury collected. And that means, brace yourself, had there been roughly 1,000 taxpayers in the US matching Berkshire's payments, no other business, nor any of the government's 131 million households would have needed to pay any taxes to the federal government, not a dime. Good to keep that in mind, because I feel there's a populist narrative right now. These are just from today. Congress passed my billionaire minimum tax. My plan cracks down on wealthy tax cheats. While those are actually the facts from Berkshire Hathaway. In 2021, Elizabeth Warren wrote, "Let's change the rigged tax code so the person of the year will actually pay taxes and stop freeloading off everyone else." Elon Musk. And if you opened your eyes for 2 seconds, you would realize I will pay more taxes than any American in history this year. Don't spend it all at once. Oh wait, you did already. I tried actually to check if this claim is true. Conclusion is probably this. It's hard to determine, but Forbes suggests Elon Musk is actually telling the truth. Anyway, doesn't really matter. But this is fascinating. If you convert 1 million into newly printed $100 bills, you will have a stack that reaches up to your chest. Perform the same exercise with 1 billion. This is getting exciting. And the stack reaches about 3/4 of a mile into the sky. Finally, imagine piling up 32 billion, the total of Berkshire's 2012 to 2021 federal income tax. Now the stack grows to more than 21 miles in height, about 3 times the level at which commercial airplanes usually cruise. I'm not trying to make any specific point here about the taxes, just pay your taxes for your crypto profits, or you could realistically end up in jail. But now comes the real learning number 3 for crypto. Charlie and I plead ignorance and firmly believe that near-term economic and market forecasts are worse than useless. So you think that you can predict what the Fed and the stock market will do, but Warren Buffett and Charlie Munger can't? Well, congrats then, you must be really smart. These are some Charlie Munger quotes. Day to day, the stock market is a voting machine. In the long term, it's a weighing machine. If you keep making something more valuable, then some wise person is going to notice it and start buying. And this one, if repurchases are made at value accretive prices. The point behind those sentences is that you can actually calculate the value of a company with net present value or future cash flows or some other model. And if the stock costs less than that, someone is going to notice and buy it. And you should too. And the mistake I see is that many take that model over to crypto. But that's just not correct. A cryptocurrency doesn't have any value that you can calculate. If someone bought all the coins in one project, they are suddenly worth nothing. Unlike if you buy all the shares in a company, then you still get the cash flow from that business. And I think this is why Buffett and Munger feel that crypto is just dumb. It's not worth anything. And they are right. There is no valuation model you can use. You have to approach this from the behaviors of the buyers and the sellers instead. You have to look at the chart. Of course, you can argue that there are exceptions, like Thorchain Rune based on TVL and so on. But in general, it is the case. But then we have another tip that does apply very much to crypto. The world is full of foolish gamblers, and they will not do as well as the patient investor. And the good news, patience can be learned. Having a long attention span and the ability to concentrate on one thing for a long time is a huge advantage. And that is one advice I think you should take with you. There are no get-rich-quick schemes, but there are plenty of get-rich-slow schemes. The performance of these two gentlemen year after year from 1965 through the 70s, through the 80s, through the 90s, through the 2000s, 2010s, into 2022 is undeniable. You can't be lucky that long. But the fact that plenty of get-rich-slow schemes exist is just no help to most people. They can't do it. They don't have long enough attention span, or they are unable to concentrate on one thing for a long time. My process and course is a long time frame model. If you don't like that, don't buy my course. Don't use my tools. Then I recommend gambling. It's just that you will probably not do as well. The advantage we have in crypto, and one reason I like this market so much, is that the price movements are indistinguishable from the stock market charts, but on a 7 to 10 times faster time frame. So while it helps to start early and live into your 90s, the crypto market offers an accelerated way to both win and lose money. Thank you, tack. CTO Larsson out. Hej då!